Number 1. Which of the following best describes the nature of financial accounting, management accounting, and cost accounting? A. Historical for financial accounting, historical for management accounting, and historical for cost accounting. B. Historical for financial accounting, estimates futuristic and pragmatic for management accounting, and historical for cost accounting. C. Historical for financial accounting, estimates futuristic and pragmatic for management accounting, and estimates futuristic and pragmatic for cost accounting. D. Estimates futuristic and pragmatic for financial accounting and historical for management accounting and cost accounting. Or E. Estimates futuristic and pragmatic for financial accounting and management accounting and historical for cost accounting. The correct answer is B. Financial and cost accounting tend to use historical costs, while management accounting tends to look towards the future. Number 2. Controller as top management accountant will make decisions in all phases of their managerial functions. Which of the following does not properly describe its basic functions? A. They can be routinary or non-routinary decisions and can be both dealing short-term and long-term objectives of the business. B. If the decisions are routinary in nature, they can be easily predicted, standardized, planned, and easily controlled. C. Routinary decisions are normally operating in nature and relate with working capital cycle involving transactions with suppliers, customers, employees, etc. D. Decisions which are non-routinary are normally guided by written policies that will not highly require value judgment of the implementing manager. E. Short-term goals may likely involve liquidity, profitability, and working capital policies, while strategic deals with stability and growth. Our answer is D. Management accountants are trusted for their judgment if ever there are any unforeseen or non-routinary decisions to be made. Number 3. Which of the following items is or are the responsibilities of management accountants? 1. Providing reports to management, shareholders, creditors, and governmental agencies. 2. Interpreting and providing internal and external information pertinent to the various segments of the organization. 3. Establishing systems which facilitate planning and controlling of the firm's resources, excluding tax planning and compliance. 4. Designing and developing overall management information system. 5. Application of internal audit procedures to assure the accuracy and reliability of information derived from the accounting system and related sources. A. Only 1 item. B. Only 2 items. C. Only 3 items. D. Only 4 items. And E. All of the items are correct. Our answer is C. We believe that the correct statements are statement 1, 3, and 5.
Question number 4. Under the IMS Code of Conduct for Management Accountants, which of the following does not describe integrity? Letter A. Abstain from engaging in or supporting any activity that might discredit the profession. Letter B. Disclose all relevant information that could reasonably be expected to influence an intended user's understanding of the reports, analysis, or recommendations. Letter C. Mitigate actual conflicts of interests. Regularly communicate with business associates to avoid apparent conflicts of interests. Letter D. Refrain from engaging in any conduct that will prejudice carrying out duties ethically. Or letter E. All of the above describes integrity. So the answer for this question number 4 is letter B, because letter B describes credibility, because when we say a management accountant is credible, he or she should disclose all relevant information with regards to the reports, analysis, or recommendations, wherein in integrity, a management accountant or any member of IMA should always consider avoiding conflict of interest. Question number 5. A division manager has concerns about the commercial potential of a software product for which development costs are currently being capitalized as an asset rather than being shown as an expense for internal reporting purposes. The manager's bonus is based in part on the division's profit. The manager argues that showing development costs as an asset is justified because the new product will generate profits, but presents little evidence to support his argument. The last 2 products from this division have been unsuccessful. The management accountant disagrees but wants to avoid a difficult confrontation with the boss, the division manager. Based on the above problem, the management accountant is faced with an ethical dilemma about letter A, competence and integrity only. Letter B, competence and credibility only. Letter C, integrity and credibility only. Letter D, confidentiality, integrity, and credibility only. Or letter E, competence, integrity, and credibility only. So answer to question number 5 is letter E, competence, integrity, and credibility only. So why? First, a management accountant should maintain an appropriate level of professional expertise, or what we say competence. So in this situation, the management accountant knows what to do but is afraid to tell the division manager. So which leads to integrity, because the management accountant wants to avoid conflict of interest from his boss or the division manager. And the last is credibility, because when we say credible, when we say a particular report or information is credible, all of the information should be found on that particular report. So in this case, if the report that was made by the management accountant is not followed by what should he or she do theoretically, then that particular report is not credible enough to be a source of to be a source for the company to make their decisions. Question number 6. A packaging supplier bidding for a new contract offers the management accountant of the purchasing company an all expense paid weekend to the Super Bowl. The supplier does not mention the new contract when extending the invitation. The accountant is not a personal friend of the supplier. The accountant knows cost issues are critical in approving the new contract, is concerned that the supplier will ask for the details about bids by competing packaging companies. Based on the case above, what ethical dilemma wherein the management accountant is facing? Letter A, integrity and credibility. Letter B, confidentiality and credibility. Letter C, confidentiality and integrity. Letter D, competence and integrity. Or letter E, competence and confidentiality. So the answer for question number 6 is letter C, confidentiality and integrity. Why? First, a management accountant should have or should possess confidentiality because he or she should keep information confidential except when disclosure is authorized or legally required. And he is in dilemma for integrity because as per with regards to the situation, he is in dilemma wherein he is afraid having conflict of interest with the packaging supplier who gave him the all expense paid weekend at the Super Bowl.
Number 7. Every Carolinian is expected to personify scientia, virtus, devotio. The university motto was incidentally aligned to the ethical standards for management accountants. Which of the following statements are true? Statement number 1. To be competent, scientia. A management accountant should perform their professional duties in accordance with relevant laws, regulations, and technical standards. Statement number 2. Integrity, virtus. Means to recognize and communicate professional limitations or other constraints that would preclude responsible judgment or successful performance of an activity. Statement number 3. To be objective, devotio. All relevant information must be fully disclosed that could reasonably be expected to influence an intended user's understanding. The choices: A. Only one statement is true. B. Only two statements are true. C. All of the statements are true. D. None of the above. The correct answer is letter B. Only two statements are true. Which statements are these? It's statement 1 and 2. It is correct being competent is present in a management accountant who performs their professional duties in accordance with relevant laws and regulations. It is also correct that integrity is present in management accountant who recognizes and communicates professional limitations or other constraints that would preclude responsible judgment. The only statement that is false is number 3. Disclosure of relevant information is not being objective, but it is actually under the ethical standard credibility. Number 8. Richmond Company operates a chain of 44 department stores. 2 years ago, the board of directors of Richmond approved a large-scale remodeling of its stores to attract a more upscale clientele. Before finalizing these plans, 2 stores were remodeled as a test. Linda Halili, assistant controller, was asked to verse the financial reporting for these test stores, and she and other management personnel were offered bonuses based on the sales growth and profitability of these stores. While completing the financial reports, Halili discovered a sizable inventory of outdated goods that should have been discounted for sale or returned to the manufacturer. She discussed the situation with her management colleagues. The consensus was to ignore this inventory as obsolete because it would diminish the financial results and their bonuses. Which of the following is correct with regards to the failure to report the nature of inventory? The choices. A. It violates the IMA Statement of Ethical Professional Practice of Competence as it fails to prepare decision support information that is accurate. B. It violates the IMA Statement of Integrity as it promotes in engaging a conduct that would prejudice carrying out duties ethically. C. It violates the IMA Statement of Credibility as it does not communicate information fairly and objectively. D. Only A and B. E. Only A, B, and C. The answer is letter E. It violates the ethical professional practice of competence because she fails to prepare decision support information that is accurate by choosing to ignore the inventory as obsolete because it would diminish the financial result of their bonuses. It also violates the statement of integrity because she chose to ignore the inventory so that it would not diminish their bonuses. Lastly, it violates the statement of credibility because she failed to report the outdated goods that should have been discounted for sale and instead chose to ignore it for personal benefits.
Number 9. Bam Bam is a financial manager who has discovered that her company is violating environmental regulations. If her immediate superior is involved, her appropriate action is to A. Confront her immediate superior. B. Present the matter to the next higher managerial level. C. Do nothing since she has a duty of loyalty to the organization. Or D. Consult the audit committee. The answer for this question is B, because when your immediate superior is involved, you should present the matter to the next higher managerial level and wait for them to take action and reprimand those or anyone who is involved in such situation. Number 10. In which situation is a financial manager or management accountant permitted to communicate confidential information to individuals or authorities outside the firm? A. The financial manager or management accountant knowingly communicates the information indirectly through a subordinate. B. An officer at the financial manager or management accountant's bank has requested information on a transaction that could influence the firm's stock price. C. There is an ethical conflict and the board has refused to take action. Or D. Such communication is legally prescribed. The answer for number 10 is C, because in this case, there is already ethical conflict within the company, but the company has still not taken action in order to resolve such conflict.